Now, the solution to analysis paralysis may sound a little odd, but stay with me here. But when there's a time to execute, there's a time to execute. You need to ask yourself these 3 questions to get the ball rolling. First and foremost, you ever get to the fridge and figure out you have no idea what you want? You open everything up, you start to investigate, and you start thinking, okay, I could get the leftovers from yesterday, but wait, the wife wants those. I could go ahead and I could just make some chicken, but who wants to cook? There was that broccoli thing that I wanted to do the other day. I don't have time for that. Maybe we could do some kind of microwave thing. You know what? You end up closing the refrigerator door, backing up and realizing that you walked over to the refrigerator for no reason because you're too indecisive to make a decision. You, my friend, are suffering from analysis paralysis. It's something that traders day in and day out suffer from. The idea that the more we analyze, the better we'll be able to make our trades. The better we're able to make our trades, the more money we'll make, right? Wrong. Just because we put ourselves in a position to analyze things well and understand the markets well doesn't mean anything unless we execute. So this video will be going over how to stop analysis paralysis and how to build a better system, a better mental model to make sure that you are able to come to the charts and not just watch the action, but take part in it. Now, the solution to analysis paralysis may sound a little odd, but stay with me here. The system is really simple. It's called Ready, Fire, Aim. The name comes from a book by a gentleman by the name of Michael Masterson. And is it for traders? Absolutely not. It's a book that's really built for entrepreneurs. It's not really developed in order to present to traders, but it has principles that can be used in trading day in and day out. Oftentimes as traders, we don't necessarily see ourselves as businessmen and women, but that's what we are. When we come into the markets, we're looking to turn a profit. We're looking to turn over revenue. In order to do these kinds of things, we have to make sure that we are treating ourselves as a business. Over the past few months, I've been trying to think about my trading more like this, in this business mind frame. So I picked up this book, Ready, Fire, Aim. In the book, Michael Masterson goes through a few different stages of everyone's business life. The exact stages, the exact details aren't important, but the principles certainly are. The first principle of which is something that we have to make sure we knock out of the park immediately to overcome analysis paralysis. It is making sure we are ready to enter into the markets. The entire book, Ready, Fire, Aim, was written in order to really start inertia, right? The idea that if we can get the ball rolling, it is easier to continue that ball rolling as we move forward. Analysis paralysis is an issue where we don't have any kind of motion. So we have to get that ball rolling. We have to get that engine started in order to start finding some trading success. Sometimes in order to accomplish this, traders need a new perspective. That perspective really starts on how we think of risk. Oftentimes as traders, we enter into the markets because we're interested in making tons of money, and a lot of traders struggle with risk up front. We hear these horror stories of people losing their mortgages, losing thousands of dollars, their savings, their retirements, their parents' savings, their parents' retirements. These are horrible things that happen, and sometimes for those of us that suffer from something like analysis paralysis, these stories are playing in the back of our minds as we begin to trade. We're afraid of risking money because we don't want to be that next horror story. We don't want to be that next Reddit story of a trader that entered into GME thinking we were going to be the next Reddit millionaire and end up being the next close to thousandaire very quickly. Now it's true. Good traders often do focus first and foremost on risk management. Good risk managers are traders that will not only be here today, but will be here to trade again tomorrow. In many ways, trading is a long game. But for traders that struggle to actually pull the trigger when the time comes, when that setup presents itself, it's important to understand that there has to be something of substance that is at risk in order for you to trade. Even if it's just a $50 prop account, at least you have something on the table. At least you have some pride that is at risk of being lost if your strategy doesn't perform well. In order to know whether or not you're ready to enter into the markets, you need to ask yourself these 3 questions to get the ball rolling. First and foremost, does this strategy look good in backtesting? Have you been able to backtest the strategy and ensure yourself that for a reasonable period of time, looking at not just 1 or 2 sessions of the market, this strategy has executed and executed well and is executed profitably? Underline big red letters, profitably. This is the key to success in trading. The second component is really just about your gut. Do you feel like you can actually trade this strategy? What do I mean by that? Well, are you an impatient person looking to swing trade? Maybe that's not for you. Are you a very patient person who struggles to think on their feet? Well, maybe you shouldn't have a scalping strategy. You need to make sure that whatever strategy you're applying fits your personality to a certain extent. The third component is really simple. It's really just about forward testing. Forward testing is all about trying your strategy in real life. Are you able to put the strategy in a very small trading account where you're just trading with micro contracts, micro lots, singular shares? Are you able to trade this strategy on that micro level at 1/10 or 100th the size that you plan on trading it with once you go truly live on full size? If you're able to do that with some real risk in the market, it doesn't have to be big. You could be risking $5 a trade. If you're looking to trade with $5,000, you could be trading with $50 a trade if you're looking to trade $50,000. The key here is you're able to put on some kind of risk and accept that risk as you're trading. Once you've gotten these 3 components down, now you can truly say you are ready to enter into the markets. Now it's time to execute. It's time to fire. Matterson believed that there are dozens, thousands, maybe millions of great ideas that never make it to the open market because of 2 primary items. The first of which is a simple case of perfectionism. The second is procrastination. Traders, investors, people really, we often get very obsessed with this idea of finding perfect opportunities, perfect trades, perfect risk to reward. It's a beautiful idea, and in theory, every trader should be looking for nothing but the most perfect trades that fit their strategy every time they trade. But in real life, you're very rarely going to get A+ setups. That's just the honest to God truth. As traders, we need to understand that 90% of our trades probably are going to be imperfect, and that's okay. If you have a checklist of, say, 5 items, for example, and you're looking to hit every checkbox on that list, you might trade once, twice that day. If that's your system, great. But if you're looking to get 3 or 4 trades, or 5 or 6, or 7 or 8, markets themselves are imperfect. So how can we wait for perfect opportunities? It's never going to play out exactly as it did in backtesting. That's just the nature of the beast. I know for myself, the best trades that I take on an annual basis, the best setups, I might see maybe a dozen times a year. Most of my trades, 90% of my trades, are B-, B+, if I had to rank them on a traditional scale. I'm okay with that. Now, if you want to be the guy that takes 2 to 3 trades a year, only the most perfect trades in the world, then more power to you. Most of us aren't that guy. Most of us don't have that kind of capital to just afford to trade 2 to 3 times a year and be able to produce the kinds of returns that we're looking to produce. And so we have to understand that imperfect trades are really the only trades that we're going to have available to us. It's just our responsibility to understand that we're looking for high probability, not certainty. Never certainty. Once we accept that the markets are never certain and that we're only looking for probability, then it's just that much easier for you to pull the trigger and go ahead and place the trades that you know you should be making. The next piece of the puzzle, the next obstacle to actually firing away and executing, oftentimes deals with procrastination. I'm sure you've done this before, where you found yourself looking for things to do to take you away from the main thing that you have to do, right? All of us did it as kids. If you have to do your homework, now's the time to do the dishes. All of a sudden, the dog hasn't been out in a couple of hours. He needs a walk. You know what? I've really been thinking about cleaning out the dishwasher. Now's a great time to try that. All of these things are great things to do, but when there's a time to execute, there's a time to execute. And look guys, I get it. Sometimes I get very valid excuses from traders. Things like,
hey Aaron, I really want to be in the live markets today, but I don't think it's the right time for me. I just realized I didn't explain my strategy to my dog yet, and I think his input would really help me to be a profitable trader.
I hear what you're saying. But just give me a little bit of rope here. It's been 6 months. Don't you think that you should just be in the live markets trying your strategy? Do you think that if you talk to your dog, do you really think he'll be able to help you make money? Look, maybe every excuse isn't that dramatic, but sometimes we put these obstacles in our minds to stop us from doing things that scare us. And this fear is unfounded. As traders, we have to be excited to put risk on the table and give ourselves opportunities to produce returns. We're risk managers. Without putting risk on the table, what are we managing? If you've gone through all the work of producing a strategy that's ready for the open market, that's ready to be involved in the live markets, then you owe it to yourself to put risk on the table and find out whether you're wrong or profitable. As a bonus piece of advice for you, if you are finding it hard to place on risk, I suggest that you lower that risk size in order to make sure you're appropriately managing yourself to the best of your ability. No one requires you to enter into the market with one full lot or one full contract or 100 shares. You can trade at a smaller size. The retail market is now flushed with a variety of different options that give you opportunities to trade with just a couple dollars of risk. But at least this way you can participate in the markets and start to build confidence. The whole purpose of this process, ready, fire, aim, is to produce confidence in your trading so that you're willing to put on risk and responsibly manage that risk as you're firing away and executing. After you've fired away, you've executed, and you've gotten a good sample size of trades, now is the opportunity to aim. Aiming is all about fine-tuning. You start off by fine-tuning by asking yourself a bunch of if-then statements. If your strategy wasn't profitable after going through ready, fire, and we're at aim, garbage. If your strategy worked well, but you lost hair over it and now the beard's getting a little grayer, garbage. The main idea here, the main core here, is to really fine-tune things, find problems, and find solutions to these problems. Sometimes these problems are the strategy sucks, so you have to throw it out and start with a new one. Sometimes the problem simply is it's quite stressful for you to trade the system, so maybe you have to lower your risk. The main core ideas around aiming are all about readjusting yourself to make sure you're hitting your targets. To make sure you're ready to begin really aiming the strategy, you have to make sure that you have a good sample size to talk about. Sample sizes vary from trader to trader. Swing traders are going to have a much smaller sample size than scalpers. Day traders will have something in between the two. But the core of it is you need to have a good amount of trades and time. For me personally, as a scalper, I like to see a couple months of trading activity before I can really judge a strategy. For me, that might be 150, maybe 200 trades over a couple of months. If I average something like 25 trades in a week, 25 by 4, or 4 by 2, you get the math. You need to find something in the sweet spot that works well for you. Most of our traders that come to TradeDelicious though are scalpers or day traders. So I suggest that you start by looking at 100 trades as a sample size to begin judging it. Look at some of your statistics. The stats that really matter, that really are going to make a difference. Start off with profitability and positive expectancy. How long were you able to hold your winners? How quickly were you able to cut your losers? Did your strategy perform well only when the market was down? Did it perform well only when the market was up? Was it more successful during times of volatility? Or did you require ranges in order to find yourself producing profit? All of these are very important questions that should flow through your head as you begin to aim your strategy and land right on target. After doing all of this work, after compiling all of this data, you should feel confident about your ability to enter into the markets. It should be easier for you to overcome this issue of analysis paralysis. Confidence in trading is all about experience and seeing yourself time and time again producing positive results even after seeing multiple different kinds of markets come and go. That's all I got for you. I hope you enjoyed this episode of Futures Focus, where we focus on trading for the future, not trading for today, but trading for tomorrow. As always, like and subscribe if you want to see more of this kind of content. Join the Discord if you want to be a further part of the conversation. We look forward to having you. Most importantly, as always, please trade well and trade delicious. I'll see you.